This is the final edition of Forecasts for the week. Hi there, I'm Ben Jones and you're watching Dukascopy TV. Recently, Euro-Yen nearly dipped below 139, hitting levels that hadn't been seen since early December. Since then, it has rebounded, but joining me on the line to discuss his longer-term projections for this pair is Ulrich Leuchtmann from Commerzbank. So, Ulrich, your 1 month forecast for this pair is 140, very similar to the levels we have been seeing recently. Can you explain your reasons behind this prediction?
Well, I think over the short run, we might see some pressure on yen creeping up again. Recent strength that we had seen was mainly due to some risk-off mood, which I think will not persist very long. But at the same time, I think that also the euro, the view on the euro might change because we have seen low inflation rates in the eurozone, and this might trigger speculations that the ECB might get active again in the foreseeable future.
Now, looking ahead, 3 months' time from now, you still see the euro-yen pair at a sideways movement of 140. What makes you think that we won't be seeing much change?
We're expecting ECB to cut rates. I think over this medium term, this might not have a big impact on euro exchange rates, basically because this is motivated by lower inflation rates, which by themselves are good for a currency. And therefore, the interest rate cut plus a lower inflation environment for the euro might turn out to be something which is neutral for euro. At the same time, I don't think that we will see massive yen weakness in the medium run because at the moment, Bank of Japan also has to consider complaints by importers, complaints by consumers who are looking at imported prices. Therefore, I don't think yen depreciation will go very, very quickly.
And finally, your 12-month forecast. You're very bullish and feel that this pair will be at 148. Why is this?
I think in the long run, Japan basically needs a much weaker yen. And I don't think that even some level in yen exchange rates would be sufficient. No, I think they need a trend of depreciating yen. And I think 1 year's time, they definitely need it. We saw it in the trade balance data and the current account data. Japan is running a trade deficit at the moment, which would turn current account into negative territory, into significant negative territory over the long run if they don't do something on that side. And I think the only thing that they can do at the moment is take measures which will weaken the yen significantly and which will result in a depreciation trend for the Japanese currency.
Ulrich, thank you very much for talking to us today. That is it for this final forecast of the week, but I'll be back with another edition on Monday. Goodbye.